Welcome to the next lesson on balance sheet analysis. In the last lesson, we saw two important tools of analysis. The first one is the common size analysis, and the second one was trend analysis. We are going to use the same logic here in the balance sheet as well and try to find out how Apple Inc. has been performing from the balance sheet perspective. In the income statement, we divided all numbers as a percentage of revenue. In the balance sheet, for the purpose of common size analysis, we're going to divide all numbers by the total assets of the respective year. So I'm going to do that by dividing all the numbers on the balance sheet by the total assets of the respective year. Simply copy paste and we are done. Okay, so what you have in front of you is the common sized analysis of the balance sheets of Apple Inc. So let's understand how it's been performing. The cash balance as a percentage of assets has been relatively stable at about 6 to 7%. The marketable securities have gone up. Marketable securities are investments in short-term securities in the markets. So that has slightly gone up by 2%. Accounts receivable has relatively remained stable. Inventory is stable. Deferred tax assets and all other items stable. So because of this 2% jump in short-term marketable securities, the overall current assets have gone up by 2% to reaching 35%. So on an overall analysis, 35% of all the assets of Apple Inc. are highly liquid, which is really good because 1/3 of its assets can be realized to cash immediately within the next 12 months. The next significant number here is long-term marketable securities. So Apple Inc. has invested in some long-term securities, possibly in the open markets, maybe in the stock market. We need to go through the annual report in detail to understand what exactly the securities are. But 50% of the money is actually invested outside in long-term marketable securities. That's interesting. And the other portion of assets is primarily held in property, plant and equipment. Obviously, this could be some manufacturing equipment or some equipment which Apple Inc. has been using. So the common size analysis of the asset side does not reveal anything significant. The percentages are almost similar. There are no wide variances except this one, where 2% has gone up in short-term securities. On the liabilities side, the accounts payable has gone down as a percentage of total assets. Possibly that means that Apple Inc. is paying off its creditors. Could be good because it is trying to avoid its debts in the future. Other numbers are relatively stable, 6.5, 6.5, 3.5, 21, 1.5. Long-term debt has gone up. So Apple Inc. has borrowed a lot of money in 2013. Possibly because of the low margins that we saw in the income statement. In order to compensate that cash deficit or the cash flow that is stopped from the main operations, possibly that could be a reason why Apple Inc. has made borrowings. Possibly we need to understand why. So overall current liabilities therefore have gone up. Overall liabilities rather have gone up from 32% to 40%. That is mainly because of this one line item, which is the long-term debt. So Apple Inc. has borrowed some money from somebody. The common stock is same. Retained earnings have slightly gone down because in 2013 the margins were low and therefore the profits were low and therefore the retained earnings are also low. So this is the finding from the common size analysis. Let us next do the trend analysis. The formula is the same. Current year divided by previous year minus 1. Current year divided by previous year minus 1 and simply drag and drop and remove all the zeros. So the trend analysis reveals that the cash balance has gone up by 32% between these 2 years, which is good. And I actually think that a significant contribution should have come from the long-term debt. Since the profits were low, possibly the borrowings were made to make good the cash balance. Short-term marketable securities have gone up, as was observed in the common size analysis as well. Accounts receivable have relatively remained stable, about 20% increase. Inventories have significantly gone up. Possibly this could be because Apple was trying to stock up some inventory for its iPhone 6 launch, which happened in 2014. That could be a reason. Deferred tax assets and other assets are relatively stable. There's a 38% increase in goodwill. Goodwill is something which comes when you acquire a new business. So possibly there were some acquisitions made in the year 2013. And total liabilities have increased by 44%, primarily because of long-term debt. And more or less other things have remained stable. So this is the finding from the balance sheet analysis. The main findings are that there increase in short-term securities on the asset side, and another major observation from the balance sheet analysis is the company has borrowed money to possibly offset the low margins that were observed in the income statement analysis. So this is the balance sheet analysis, and the next video we'll do a simple cash flow analysis.